All right, welcome to the February 23rd, 2024 Business of Ag Success Group meeting where we are awaiting our guest. A guy named Riley joined a couple months ago, and he wanted to talk about his company called Harvest, which is software to then do management of labor, especially that, which is H2A. Anyway, I don't know, man. I said, sure, we'd like to hear about it because we've talked about labor issues before and mixing time to a bigger topic. So he's not here. I got to be really honest with you. You know, it used to be this idea that a person would start a company and then they were overzealous about selling it before they actually really had things perfected. It seems like now the angle is continue to work in the background on perfecting whatever you think your product is before you actually promote it, because I would think that if I had a company, I would want to come on here and talk about it. So, Riley, I do hope that you come to us talk about it. A big congratulations to our friend Jared Creed's Kansas City Chiefs. Actually, congratulations to Sony, Apple, Campbell's Chunky Soup, Geico, State Farm, Pfizer, and the 17 other corporations that are tied into the Travis Kelce, Taylor Swift, a marketing ploy which they pretend to sport. I'm convinced that there will be a reality TV show being announced on CBS here in the next 30 days, sponsored by all of those companies. Brilliant move for Travis Kelce, but whatever his agent was able to do, I don't think he's actually still met Taylor, but it's brilliant marketing. And I think that, I mean, this guy is not going to have to catch a football another couple of years just on the money he's got from the 17 endorsements. Brilliant. Anyway, marketing masking his football. I have to say that because Jared gets really, really uptight when I say such things. He's not even listening. Anyway,
they're missing a huge opportunity here selling 87 jerseys with Mr. Swift on the back. I mean, I would buy one.
I don't disagree with any of that. All right.
Obviously you haven't scanned Etsy lately, Todd.
Oh yeah.
Yeah.
Yeah. I don't spend a lot of time on Etsy.
They're there.
But you look like the kind of guy with the kind of hair that spends time on Etsy.
But it is absolutely marketing, and I'm telling you, when there's like 6 companies that dude has endorsements now, and he had, I think, 1 2 years ago, or none 2 years ago, 1 year ago, 6 now. So brilliant. All right. Speaking of endorsements, I wore my Washington Wheat hat, hoping that my Michelle Hennings might finally show up, but it's not going to happen. All right, so without Riley here to talk about the H2A and the labor management stuff, we're going to kick into some other things. I'm going to lead off with farm income. So Jim Wiesemeyer, he's the policy analyst with Farm Journals and Pro Farmer, was my guest in my most recent podcast that just released on Monday. Whether you listened to it or whether you didn't, we talked about a lot of things: farm bill, farm policy, and farm income. So the numbers are $168 billion was farm income in the year 2022. To put it in perspective, in case you hadn't already heard this, 21, 22, 23 were the 3 highest farm income numbers that we've ever experienced in the history of record keeping through USDA, et cetera. 21, 22, 23. Our high water mark was 22 at $168 billion. We're going to be around, projections are around 101 right now. So I can run that math, but that's about a 75% deduct or some crazy thing like that. From 168 down to 101 is where we're looking at being 25% from just last year to this year. So this has happened before. Those of us have been around long enough. 05 to 013 was a very big run. Some would call it an agricultural super cycle. When you look at, that's one of Dave Cole's, I can't take credit for that term. Him and somebody else came up with that, I believe. David Cole, a guy from Virginia Tech that's on the speaking circuit. Super cycles meaning these things where it's not just good, it's ultra good in ag. And you can talk about, like, if you're history minded, drive through where Bobby lives or drive through where I live, and you'll see these like barns and clay silos or even early stage silos. This expansion of production agriculture happened around like the 1920s. And then we obviously went through the Dust Bowl, the 30s, et cetera. And then you got the 1950s where things started getting good again because Europe was obliterated. We were rebuilding, capital was outpouring, the economy was on rapid expansion mode. And that was one of the few times where Main Street economy and agricultural economy did actually walk in lockstep. Usually they're inversely related or at least countercyclical. And then we had that 70s, and then the 80s bust, and then we had 05 to 13. We thought, some of us, that we'd never see things really improve like that again. And 20 was okay, 19 was okay. money was thrown at the government, the TARP, I'm sorry, the MAP and the MFP and all these things, tariff relief, et cetera. But when you're talking about 3 record years, both nominal and real, by the way, that's adjusted for inflation as well as nominal numbers. So 21, 22, 23. I remember speaking at an agricultural event in 22, and I point blank said from the stage, I said, hey, I just filed, somebody talked about risk management and risk analysis, and I just filed a speaker talking about debt load. I'm like, I just want to point this out as an outside observer. If you have distressed loans in 2022, get that lender the fuck off of your books, because if you can't get payments from someone in production agriculture in 21, 22, you don't want to be loaning to them when things get tight again. So what I'm seeing is ag usually overreacts. Maybe everyone does. That's why we end up having recessions and booms and busts and whatnot. But I'm already seeing it where there's a bit of doom and gloom. There's really no blood in the street yet. Here we are coming off of 3 amazingly record years. Is the 25% deduct substantial? Yes, it is, because also it's about a 50% deduct or 40% deduct from just a couple of years ago. The point is, it's significant. If your income, if your business, was going to take a 25% deduct in revenue, you'd be a little concerned also. But it seems like in a business that has had so many ups and downs, last time this happened, the big 6 became the big 4. Consolidation happened like running for the exit screaming fire. So I just kind of am putting, shall I say, I'm not hitting the brakes. I'm just taking it off of cruise control for a minute and looking around and seeing that this farm income thing is going to impact all of us, because farm income also impacts everyone on this call, everyone in this business. But I guess I'm calling a little bit of a let's not run for the exit screaming fire just yet, because I still don't see anything close to blood in the street. But I want to toss it out there. Jared's a money guy. Some of you sell to the sector. It's a big topic, but I'm already hearing at these meetings about, what are we going to do? We're going to start seeing farms liquidating. Wiesemeyer brought that up in the podcast. He started saying that, land values are going to take a tumble. They haven't yet. They tend to be a lagging indicator. They tend to be a few years behind farm income. Rental rates go down a little bit. Farm land values go down after that. I'm not seeing it yet, but I just kind of want to throw it out there that it seems like there's a little too much apprehension for no earlier than we are into. It's February 23rd, for crying out loud, into a year of projected declining incomes.
So one thing that I might mention there, Monsanto Bayer is having a major restructuring right now. They are, I don't know the numbers. I don't know if anybody knows the numbers, but I know that, like, for me, my business did some consulting work for Bayer for a number of years on their seed production side of things. And they have eliminated that budget across all of their production plants. So when you talk about a 20% revenue hit, I'm experiencing that right now. So, but I think it might be indicative. And Monsanto Bayer obviously has some different stuff going on with, the problems that they have with Roundup, of course.
Well, yeah, legacy settlements. They settled stupidly for, what was it, 68 billion or some. I mean, it was a number bigger than I think they had paid for Monsanto.
Yeah.
No, it was maybe 12 billion. I'm sorry. I'll look it up. Go ahead, Alec.
No, so I'm just saying, from my perspective, what I've seen so far, it's been more on the corporate side of things, which they may just be may be faster to the race anyway, as far as keeping pencils sharp.
Or fat, or fatter than they need to be.
Yeah, sure.
Would be the alternative, because Pfizer's gone through some major restructuring as well. And the talk here in John Deere land is that the mandate for John Deere folks to spend 4 days in the office is really basically coming back after COVID, is really just to see how many folks they can get to quit before they do their restructuring.
Sure, that's an easy way to get rid of people. Ultimatum.
Yeah. I also, and I'm not talking out of school, but it's FMC did a major thing also. We do some work with them on the extreme ag side. So reduction in force. And then I heard about another company that's doing some of this. So is it, to Bobby's point, is it they realized they were fat, or is it that Alex point, they're just fast to the race? I think they're fast to run to the exit screaming fire. Again, they threw together those consolidations. But Dow and DuPont, side note about marketing, a 1700s, a company from the 1700s that is a name brand, and a company from the 1800s from Midland, Michigan, that's a name brand. You have two companies with name recognition throughout the world, Dow and DuPont. Let's make sure we fuse them and then name them Corteva, that nobody's ever fucking heard of. Brilliant marketing. Brilliant, brilliant, brilliant move. You know what? If Ford and Chevrolet fused and call themselves Dedeco, you're going to be like, God, that seems like a really stupid idea. Well, it is. Anyway, I think that the problem is they think like commodity producers, and all they know then, and this is the thing about innovators versus commodity producers, these legacy companies, then all they know to do then is cut back. I mean, that's okay. Okay. You know, it's kind of like consolidation. Todd and I make this point about consolidation doesn't actually create demand. Consolidation doesn't create innovation. Consolidation just pares down expenses. Consolidation is not reinvention, or in any, it's simply a matter of hopefully maybe fusing of economies of scale.
Well, and you don't have, these companies are really not capable of true innovation at scale, right? And so if you're not able to address that side of the ledger, the only side of the ledger you have to work with is cost, and you just start trimming, right? So what you normally see in these types of cycles, if we're going into one of those cycles, what you normally see is an actual competitive advantage for some of the smaller competitors that have retained that capability of innovation, and people are more open to innovation when things are challenging than they are when things are going well. So I think there's a lot of psychology that plays into that. But, you know, an interesting piece, one of the topics that I had on my list of potential things to discuss today is actually the opposite. On the pork side, we got a report the other day, I think Wednesday, that pork exports were record levels. Almost 30% of the pork we produce went to export. Record levels of exports, both in volume and in value. And that was the little hunk of meat on the bone that the industry needed to, you know, just go nuts, right? And so there is just a huge wave of optimism coming off of the, you know, worst year in the history of pork production from a financial perspective. And I may be completely alone there, and I almost sent some posts out that were probably not wise, would not have been wise. But we had this article, and I mean, my response to that was, you know, we just came off of the worst year in the history of the pork industry, and the National Pork Board is running out this article going, look how great we are, spiking the fucking football in February after we just finished the worst year in history. I mean, it's bizarre to me. It's a level of delusion that's just hard to wrap your mind around. So it's interesting to see this sort of, you know, we tend to go from this, Chicken Little, the world's ending, to irrational optimism, and just bounce back and forth between the two, and we can't ever seem to find a middle ground.
Anybody got anything? I want to
Well,
hear
and my experience would be anybody who is that optimistic after a negative is totally showboating. I mean, there's nothing, they're just trying to mask how bad it really could be.
The pinnacle of null achievement.
Actually, I would say the other thing to Bobby's point there is that when it's one of the trade groups that gets paid by taking a slide off of everything, meaning the checkoff type programs, they take, like you said, any little teeny portion that they can and run with it. Like, see, look at this. A country with a population of 2 million bought a shipment of pork. Keep producing, boys. And it's like, what the hell are you talking about? But yeah, that's kind of their thing, which, by the way, is long-term wrong, bad, because these trade groups don't really in many cases, they don't really open up new markets. That's one of the things that they're supposed to do. They don't really know how to market and sell. Find a person with one of the checkoff programs that's actually been in a selling or marketing, real selling type of a position, and it's far and few between. They tend to be a bunch of bureaucrats, politicians, whatever, that just like to nod their head and then, go to meetings and talk about how how amazing their industry is. So the reality is, here they are, that they just keep encouraging production because they make a slide on a checkoff off of everything that's produced. Well, as we've said in our recordings that are upcoming, Todd, we're in an oversupply situation on everything, and we have been for a long time. We have been oversupplied on milk since the 1980s when they did the dairy buyout. We've been oversupplied on corn since we invented the CRP program and the PIC program to burn up corn, and then the renewable fuel standard. We're oversupplied on everything. That's, by the way, the topic that Todd and I have the next 2 episodes are coming out about, and we got some pretty good information on that. But yeah, what your point is, because I've seen this also. Hey, it's all right. China just committed to another million metric tons of soybeans, so we're okay. Keep on producing more soybeans than we need. That's where we are, and that's why we're in these commodity price positions. I don't see it changing.
I don't see it changing, much either, because the incentive structures are, well aligned for that. I was sitting there reading that article, and to Bobby's point, I think there's a lot of truth to what she said. But by the same token, nobody from the industry is speaking up, including me. But I look through there, and the comments are all, great job. That's, it's nice to see light at the end of the tunnel, maybe shining star or whatever, and you can't fault the poor gal whose responsibility it is to, basically increase exports. So she's out there spiking the football, but hell, she had a great year.
Right.
Like that.
But
That's her
somebody is
job.
supposed to be out there promoting exports.
Yes.
That's what the US Midwest needs, is a weak dollar and exports. We flat out need it because we have the ability to produce everything that we need. So without the exports, so at least the poor gal that's working the export desk, like you said there, Todd, at least she's doing something.
Well,
Right?
yeah, for
So
sure.
she's the real winner out of the deal.
And
Our industry is
absolutely
not, because they need 10 more of her.
right. Well, and we absolutely need that. But I think our point, the longer term point is, that's great. We need to do that in the medium term, but is this a long term solution? I don't think so. So the post that I did put out there, which has gotten no traction whatsoever, is, okay, so 30% is great. At what point does that become a problem? Right? What if it's 90%? What if we're exporting 90% of the pork that we produce in the US? Is that a problem? Is that good, bad, indifferent? Nobody responds. Nobody's asking these questions. It's just wow, what a relief. So to me, the response to that should be, yeah, the lady that's responsible for exports, good job, but maybe not a good look to be spiking the fall when everybody's just lost a ton of money. But by the same token, if it was already bad, it would have been, if we hadn't have done this, it would have been that much worse, right? So we lost less money than we would have in the worst year ever, and somehow we found a way to celebrate. There's just something really messed up about that I'm having a hard time wrapping my mind around.
It's like hype in a stock. It's just hype. It for me, it throws all kinds of red flags.
It's like giving
Yep.
a market outlook presentation, Bobby. That's what we do. We sell the story. All of us in my line of work, we're all full of shit. It's just some of us are better projecting being full of shit than others. I'm
You
not
sound like
joking
you're
about
full
that.
of shit right now, Ryan.
Right, but that's, with these market outlooks, it's all about the storyteller, not the story, right? So, but that cycle continues to keep popping up, right? You start seeing people in the speaking circuit. They have their time, they have their zone that they're in. But it's all, it's not real, but it's how you generate business.
Can't help but think that was a backhand slap at me, people in the speaking business, but that's all right. I've never come up with life as a window pane kind of a motivational mantra. I remember I was a comedian or an ag outlook guy, but thank you, Ryan. Hey, I want to
But
point
that's
out
how, but that's how you could make millions of dollars at it, Damian. You're
if I
doing
was
it
more
the
of a
hard way.
charlatan, if I was more of a
Yes.
charlatan, I'd have been
Fuck
life as a
yeah.
window pane and whatever kind of horseshit, platitudes and nonsense and make people cry and close with a poem. Anyway, by the way, I just want to point that out. If you ever I've vowed this. If I'm ever at a conference and the person on stage says, "No, I would like to close with a poem," grab whatever silverware is on your table and start flinging it at the son of a bitch on stage. Any person that closes with a poem is a hack, just so you know. All
Oh
right.
no, but then there's one bet that's better though, is when the one guy who now works for us said God wants you to buy put options. Like I just lost my goddamn mind. I was like, you're kidding me. And this guy's built a massive business on this.
God,
He's got Bible verses telling you about how the Lord wants you to buy put options. I'm like, this is
That's
awful.
new scripture. I like that.
Mhm.
it's brilliant. You know
Look
what,
at this
Ty?
arrogant
Ty,
atheist.
put that
That's scary,
God-
scary stuff.
God wants you to bank with Compeer Financial. All right,
Yeah.
so
Marketing genius.
yeah,
I'm
I
at-
mean, I can
I'm
put
in.
this everywhere. God wants you to be a client of JC Marketing Consulting. See what, Jared? I can do this all around, man. God wants you to buy stuff from Bobby. I mean, I can. Hey, all right, let's go back to the farm income stuff and where this all goes. So the point is, these companies are getting, I think, a little bit over they're overreacting on stuff, but it also could have been that there was just fat. But what I've wondered then, there's been a boatload of money. This ties into my number 2 point about the massive amounts of capital that is undeployed. We have seen the money pouring into the ag space, particularly on ag tech and on biologicals. And it doesn't take much. No, venture capital people are kind of smart, but also they chase trends. And then it's not hard to get a bunch of investors. As I always point out, when the people in Scottsdale, Arizona come up and talk to me at some event and say, "Well, I'm a surgeon. Now I understand you're a farmer. Should I be buying farm ground?" When the surgeons in Scottsdale start talking about buying farm ground, you should sell your farm ground, right? So I think this money that just absolutely poured into the ag space from venture, from tech, from whatever, from Silicon Valley, even. It came because things were really good. And there was still this whole kind of feed the world. We're going to starve. Our resources are finite. It kind of all was the same storyline that perpetuated it. Is it going to dry up as fast as it didn't come in like that, but it came in buckets starting, I'd say 5 years ago. And Walt would be a good one to ask about this. He's driving right now, and I think he's on here. It seems to me that money is already slowing down a little bit. Like Pattern Ag that sponsors me, my podcast, Pattern Ag is investor backed and not still profitable. And I'm not being mean. They would tell you that. Natalie is part of our group. Is the money behind them? Now they actually have revenue. They actually are creating revenue. That's like unlike some of these tech companies that they have an idea. Some of the biologicals in ag strike me as the .com. We've got this concept, like whereas Pattern actually, so Pattern will probably keep going because they have actual revenue. I just wonder, are we going to see it drying up? Like is 2024 going to be the year where the money that poured into the venture ag space, and that's typically been biologicals and tech, is it going to like all of a sudden the spigot's dry by Q3?
I already heard about multiple venture-backed firms having down rounds. So
Down rounds?
yeah, so basically
They're getting money, but it's not coming in to the tune that it was.
yes. And I think investors are starting, the VCs and private equity starting to say, this is a great idea, but we operate on a 5 to 7 year timeline. We are now in year 4 of the investment or whatever, year 5 of the investment. Where's this going? And I think we're going to see a lot of consolidation, maybe just straight up closures because these companies can't perform at that 5 to 7 year flip cycle that private equity and venture capital wants to see.
So is that capital drying up? Is it being diverted somewhere else? How do we know?
I don't know. It might be just, I mean, it might be going into a 5% money market account, right? I mean,
that's exactly
5%?
where it's going. It's certainly, I mean, if you can earn 5% or you can wait 10 years to get 5x on your money, you know, a lot of the investments that VC firms, I mean, the publicly traded companies are a lot of the syntech, biotech are down 70% on their valuation. So the seeds, the A's, the B round investors are worried that those C, A's, B's aren't going to come to the table. And they're saying, well, if we're going to put money in now, there's a good chance that we're going to get squashed on the valuation. So you have more money that's gone into these deals than a valuation will support based on the recapitalization of valuation. So it's not to say that a lot of those companies didn't have great things going on, but now you're going to have preferences. You're going to have you're gonna have a lot of lawyers making a lot of money as they reconfigure these cap tables to accommodate for the dilutive event that happened to all those preferred shareholders who had protection. So it's just a really messed up market right now for venture.
So Alec kind of lumped VC and the private equity in there together. I talked to a private equity guy on Monday. He seemed to be implying that he thought they were looking at more opportunity because some of that capital was flowing more in that direction because they tend to invest in later stage, more established companies. So he runs a $6 billion fund that's about to be a $7 billion fund, and he says that money's coming from what had been in VC. Does that make sense?
There's more money on the sidelines than there's ever been in VC land. There's more money in those in PE that's sitting on the sidelines right now, because over the past 20 years, investors have been programmed to be momentum investors. As the investment is going up, you're expected to get an exit on the next round or the next round until it goes public, and you get that retail, that retail bump as it goes public. But because it's going down, everyone's sitting on the sidelines. They're able to be a lot more picky, and they're able to wait for those valuations to kind of true up with what public markets are looking at. So there's a ton of money on the sidelines. There is money out there, but for the companies that are looking for it, it's going to come at, and the investors who are already on the cap table, it's going to come at a painful price in most cases.
I think these companies need to at least be showing revenue. To Damian's point.
Yeah, meaning if you're going to get new money invested, there's a little bit more of a litmus test than there was a few years ago, where it was Chad and Todd have a brilliant idea in ag. Okay, here's $100 million. Now it's got to be, we've actually got customers and a revenue base, etc., to get money. That's your assertion?
I think so.
It's definitely going to slow down the innovation pipeline for sure.
So the question there that you just brought up a great point, Damian. So is the most valuable part of this entire equation is, do you have customers?
Well, we saw that, and I'm just going to get a little historical here, and I'm not, we got a couple people here that are probably better on the investor side than me, and Chad's sitting at his mountain retreat. It looks like one of the 7 places that his hedge fund owns. Anyway, when you saw the .com, if you remember your history, the 1990s, whatever, 97, 8, somewhere in there, it truly was Todd and Damian have an idea.com. And I'm not kidding you, tens of millions of dollars would flow in there, and it was totally blue sky. And it was, and I remember Warren Buffett being interviewed and watching the interview, and he said, I just don't understand how Coca-Cola has a multiple of this with global revenue. And he went through the numbers, and he said, But Todd and Damian have an idea.com. I'm joking, but it was just about that silly, is allegedly valued at, $1.9 billion, and they don't have a dollar of revenue. So it was nuts for a couple of years where Todd and Damian have an idea.com was worth allegedly stock valuations of billions of dollars. Then the crash kind of happened, and then it became, then at least there were some of those tech companies that if they had a customer base, because then it seems if I'm going on memory here, they got acquired. So all of a sudden, maybe Cisco bought the Todd and Damian have a bright idea.com. If we actually had 3 years of a customer base, maybe we were still not close to profitable, but at least we had proven that a product that we had been in the marketplace and sold. And so we might be at that point now, to what Alec, I think, is bringing up, that if you have an actual customer base in ag and you actually have revenue, to like the Pattern, for instance, ag company, versus just we have an idea.
Yeah, I would change a word. I can't. I'm sorry. This is Walt. I'm driving. I don't know who said customers. I would change that word to revenue straight up. And I would point everyone to a new resource I've been listening to. If you want to get Silicon Valley, if you want to try and get Silicon Valley, keep up with it in one podcast, I would recommend the All In podcast, which is 4 billionaire investors who were all operators at startups. Only one of them, AgTech, Dave Friedberg from Climate. But these guys know what's going on, and what they're talking about is startups that have revenue are going to be able to command fairly traditional multiples based on revenue and growth. Those that don't have revenue, they're back to the eyeballs test in the 90s. That's just not going to work out well for them from an investor and particularly from a valuation perspective. You're just not going to be able to sell eyeballs and prospects as well as you'll be able to sell revenue to investors.
Spot on about the All In podcast. I picked it up a couple of months ago. It's entertaining, and it's an hour. It's a good spend of your hour.
So the point that Walt just made there is that, what did you just say? If you're going to get investors, we have to have revenue, but it's not to say that this, okay, we'll answer this. Then that means that a bunch of the ag money that's been pouring into ag, again, like in the biological space where we have 1,200 companies and bunches of them haven't sold anything. Are they going away?
I have been inundated with inquiries from these types of companies saying, desperately wanting to get introduced to potential buyers, not somebody that's going to help them, figure out where, and I read that to mean that their investors are telling them, you've got to have actual customers, actual revenue on the books, or the money's drying up. And I mean, it has been remarkable, the number of people that have reached out to me. I've had more of those calls than I have the guys from India wanting to do SEO on my website. It's crazy.
Well, think about it this way, guys, from a macro perspective. Agri-food tech went from $2 billion in 2014. Climate Corp gets acquired for $1 billion. To Damian or whoever's point made it earlier, it's a momentum investing game. And so you went from 2 billion to 50 billion, 25x in about 10 years. And of course, we added the food tech to the ag tech stuff. So it's behind the farm gate and it's all the fancy foods, the vertical farming and the alternative proteins that I continue to make fun of because they were overhyped. Well, that 50 billion went down to 30 billion in 22. So we lost 40% in a year. And it looks like we're going to have lost another maybe 5 to 10% off that. So we went from 50 billion in a year to likely 55 billion in 2 years. So Todd, your phone's going to keep ringing because there's about a half the amount of capital we expected in the last 2 years. And the other thing the All In podcast guys got me a little more attuned to is private equity and the corporate guys, the strategics, the John Deere's, Case New Holland's on the equipment side, the Bayers, Syngentas, UPL's on the chemistry side. They like to bottom feed. They like to value shop. And so as capital dries up on the venture cycle, a lot of times these guys are coming in and say, where can I get a deal either as an acqui-hire to get some talent or as a product acquisition for cheap when their R&D doesn't go well, right? So I think you'll continue to see those companies, Bayers, Syngentas, Deere's, et cetera, do less R&D, do more strategic investing, do more M&A because R&D is getting harder. And I definitely think that private equity guys are going to bottom feed a little bit. And remember, there's 1,200 biological startups, and we just lost 40% off the market. And all this CEA and alternative protein venture capital tourists, as Kirk Haney calls them, they've left the building. So I think capital is going to continue to dry up. Your only way to get it is revenue, and you may not like the valuation you get, but you may have to just hold your nose and take the money.
That's completely consistent with my experience. The guy that I was talking to on Monday, the reason we had the discussion was they reached out to me, sent me some financials, and right before the call, he said, one of the first things we want you to think about is how much of the company do you think we could buy for $40 million? And I replied back to him and I said, 120% question mark, right? It's like, I don't think it's worth that, and so that's the way they're looking at that. And because they have a longer time horizon, because they tend to, put more investment in, not just capital, but in human resources and strategic direction and stuff like that, I think you're definitely going to see these guys, getting pretty aggressive on, moderately distressed assets.
And there's going to be more moderately distressed assets based on if in ag, since that's where we obviously all work. By the way, it was Chad Walt that talked about momentum investing. To be honest, I have never used the word term momentum investing. So let's give credit where credit is due. And also Chad's got a good space here. Now I want to go to this other one though. You guys just talked about capital's drying up. Funny money, venture money might be, but I just spoke in Idaho, and one of the sponsors for the event was a bank that's got $3.2 billion in assets that, has been just growing. They're a 120-year-old bank. About just a little less than half of their book is in ag. The president of that bank was on stage before me, and he's kind of a personality. And he said, he gave like this 3-second background on his company. He says, "We have money to loan. I want you to borrow money from us." He said it like 5 times. We have money to loan. We have money. And he said that historically they've been at an 80 to 20 loan to deposits ratio. They're at like 50. I mean, he said, we have so damn much money that we want to loan. We want people to approach us. We have money to loan. So it seems to me there's still massive amounts of money sitting around in places. And so I want to go with that. Chad just said it also. So when Walt says it's drying up, well, it flows into ag funds might be, but that doesn't mean there's still not a boatload of money sitting out there. So Chad, I want you to hit on that.
Yeah, and Chad, how do we measure that? What is the metric that we look at? Because you said there's a lot of money on the sidelines. That's exactly consistent with what I'm hearing and seeing. But is there a way to measure that? Is there a way to understand,
incidentally, Chad,
where that's flowing if it's not flowing to where it was previously?
Incidentally, you just typed in the question because I want to do that before we forget. D.L. Evans Bank in Idaho.
I get my information from a group called Axios. They do surveys across a lot of venture capital and private equity firms, and they're reporting, that, and it's pretty consistent. I mean, any kind of media outlet, financial media outlet is in touch with VCs, and they're talking about how their deal flow is just completely slowed down, and they can get good money from interest deals, and they weren't able to get any money from interest because there was no interest before, right? So they were deploying that capital. That was the place to do it. Now they're sitting on a lot of capital, and they're being very picky about those deals. And there are and they have there's a challenge for companies that are in growth stage, that are early stage, that are hungry for capital to spend on R&D and expand their operations, etc. And that is time. Time is not on our side. And so the longer capital waits, the better deal they get as the capital dries up. So
real quick, I think Todd, you asked about whether there's a metric. I think there is a metric we can watch behind the venture guys, and it's called LP inputs into funds, right? So if you look at the limited partners, they're the guys that start the whole ball rolling, right? The limited partners write a check to either the venture capitalists or the private equity guys and say, go invest my money for me. And as a metric, what I'm seeing in both agri-food tech and venture generally is the LPs are increasingly saying, hey, I'm going to cut my investment into you in half because the results aren't there, or I'm going to cut I mean, the all-in guys are saying, and they're big LPs as well as investors themselves. They're saying, a lot of LPs are saying, I got 10 guys I invest in, I'm going to cut that number in half, or I got X dollars I generally invest and give to these guys, I'm going to cut that in half, because you're just seeing a slowdown. Again, there was going to be a comeback in 23 in the IPO market, and due to a bunch of factors I won't try and articulate on this call in 2 minutes, that IPO market did not reopen very nicely. So folks are looking at the window going, all right, if IPOs aren't coming and I got an LP, I got a checkbook as an LP, I'm just going to whoever made the point a minute ago, I'm going to sit on my checkbook, wait till things get a little more clear, put it in government bonds at 5% or whatever they can get on the other side of the money market, and just wait. Because if you don't see exits coming, and you do have that 10-year window that venture capitalists have, and you don't think it's going to show up in 10 years, the LPs can just wait. So watch the LP infusions into funds and look where they put it and how fast they're putting it. They're not putting it in very fast right now. Whoever said it earlier is right. There's a lot of money on the sidelines that's not moving off the sidelines at this moment.
Yeah, that again, like what you guys are saying is very consistent with what I'm hearing on the street. That the conclusion of that conversation with that PE guy the other day was, he said, well, our hesitation here is that we don't need to be writing $27 million checks. We need to be writing $227 million checks. So it's like, I mean, it's really wild. It's a very strange situation, but man, if you're in the right spot, I mean, there's definitely plenty of capital out there.
Yeah, well, what's interesting
when we
about
say
that
capital's drying up, it's drying up in the sense that it's not flowing to the same places that it was flowing before.
What's interesting is, and this has all happened in the last few years, and maybe it's because of the COVID, government flow of just flinging money out there. But if you're a person that, like those of us on the call, you like to think about, I'm going to get older, I'm going to have investments. Well, if they can't find a place to put $227 million, where in the fuck are we supposed to put 1 million? So, I mean, they get better sniffs than we do. No offense to Jared, he's a money guy, but he's hanging around Dunlap and he doesn't have $227 million to fling around. He's not getting the kind of sniffs that 227 million capital funds are. Where are we supposed to put our money? I mean, it really does become this challenge that I've been looking at over the last year, because remember, we had the PE guy on with us. Was that October? No, it was even before that. About 1 year ago with the company out of Effingham, Illinois. And he came on here specifically to have us ag people as more tentacles to bring him potential ideas, because they're sitting on a bunch of money. And so it becomes this thing of, there seems to be, what we should probably all be doing, instead of looking where we might put our $10,000 or $1 million, whatever our little businesses might have, we should probably just be finding the next thing and then going to the guys like you're talking to, Todd, and saying, I found a place for your 27 or your $227 million.
That's pretty much my business plan for the next couple of years.
Well, it's not gonna be pigs. The problem is you're specialized in somewhere that I don't know that anybody needs to be investing more. We need to be investing less. We need to be divesting from pork production based on the market conditions.
Yeah, there's always opportunities though.
It seems to me that innovation within the agriculture sector is not as robust as it should be. It's a lot of outsiders that are trying to innovate in agriculture and tell folks how it needs to change, and that's led to a lot of failures, quite frankly. And it's those idea guys that have maybe had a successful win in the past that bring another concept. And I know this isn't really ag, but it's food, like a concept like Juicero, right? We're going to apply technology to something, and you get a bunch of VCs who have won before, and they'll just throw stupid money behind something that doesn't have any efficacy, doesn't have a real plan behind it, and that money gets lost, as it should. And we've seen kind of a lot of companies, I would say, that were quote unquote unicorns get overfunded and And some of them made it to the public stock market, and those investors made their money out and got to take their chips off the table and left the retail investors sitting with the bag. But it does, I don't think it helps the entrepreneurial community when, you know, deals go sideways or investors back a poor business plan, and that happens all too often, I think.
I think this comes back to kind of the age-old business strategy, you know, of providing a product or service that solves a problem for someone else, right? Or, you know, creates more value than it costs. And I just look at a lot of these companies and it's like, what would you say it is that you do? You know, it's
So
Well,
what are you're saying,
that's a
like
great
profit is important? I mean, like how
Right.
old fashioned? I mean, okay, boomer. I mean, come on.
right, exactly. No, but yeah, you look like, I mean, I talk to people all the time that, you know, they'll email saying, hey, I'd like to collaborate on this. And it's like, all right, what is it? You know, what is it? And we've talked about this before. It's like, what is it that you do? We help farmers make more yield. Okay. So I think there's this, I think it starts from the bottom where, you know, defining what the problem is. What's the problem? Create a
I'll
solution
totally
for
agree,
that.
and I'll throw in an additional provocative thought on the call. I think if vertical farming and Beyond Meat Impossible Burger showed up in 2024 and tried to raise capital, I don't think they'd find very much. I don't think those boom and bust cycles in vertical farming and alternative protein would have boomed and busted this 10 years coming up like they did the last 10, because I think the capital is getting more skeptical and I think they're asking more questions. So in some ways it may be good, but it does go back to your question. How many of these biological startups are going to solve a real problem and get some real capital, and how many are just going to dry up and die?
Well, that's a great point.
So-
Well, I want to throw out there that what Beyond, whether they really believed it or whether it just became their marketing mantra, and the two examples you used, alternative protein and indoor agriculture, their whole thing was they sold somebody and they got nice publicity. You know, the New York Times did an article about them or what have you, NPR, name any left-leaning news source, which is all of them. Climate change. We're going to address. So they didn't fix a problem that you really cared that damn much about. They didn't fix a problem that a producer really cares at all about. They fixed a problem that media told us we all cared about. Climate change. That's kind of where the biological thing is. I mean, if it's truly, we're going to let you reduce harsh chemistry. It'll keep the federal regulations off of your back and not sacrifice yield. That speaks to anybody in production agriculture. If it was the skinny jean wearing tech crowd, because I see them, trust me, I work with them in my other role, and they think they're out here fighting climate change with some, 4 ounces per acre in a field that they have no idea what even happens in that space. So I think that's the problem, that they thought that they were, wasn't it, Todd, you and I talked about it? The pitch, it's kind of like the pitch to me. I get them for my podcast all the time, every week. Lori and I laugh about them over lunch. Just, yeah, their pitch to you is they've got a solution that's going to fix climate change, and it involves, and it's some outlandish, like they're going to, the moonbeams that come down are going to be reflected on rare earth minerals, and it's going to charge a battery. It's going to change whatever. It's just like, what the hell are these people even talking about? But apparently they've got enough funding that they can hire a PR person to reach out to people like me to say they want me to be on their podcast.
Well, in the past few years, that those pitches have appealed way better to VC, investors than they did to people in production agriculture that at some point are going to have to buy this shit. And for whatever reason that is, I mean, that's clearly the case. And some of that is just, these, I had a guy that reached out to me a while back. He's got an interesting product. I don't know if the industry's ready for it. I don't know if the timing is right or whatever. But one of the pieces of feedback I gave him is like, you can't say that shit. You can't go out to these guys and say, what you're doing is really stupid. I can say that because I'm part of it. Like I did that stuff. You know, if I say, hey, you're an idiot for doing this, and I can say that because I was also doing that same thing, right? So there's a big difference between me saying, you know, the way we've done things in the past, you know, can't be the way we're doing things in the future. And then you coming in from the outside that don't know shit and don't have any credibility in the industry, and you're saying, look, the way you're doing things is stupid. That is not going to go well. I don't think that's going to go well with any industry, really, but it's sure as hell not going to go well in agriculture. And that's where a lot of these guys are stuck. You know, you've got a good idea, you've got a solution, maybe you even got a real problem, but just the way you're delivering the message is just not going to resonate with these guys.
Hey, I want to do
So
something.
then maybe, guys, we look at biologicals and we basically say, all right, which ones of you are not solving a problem? You're solving a non-producer problem like climate. Which ones of you are solving a problem and have done it well enough where you can capture your first customer check and you have a pipeline to more? So maybe revenue is the true source of all goodness, because if you can't convince a customer, a producer to buy it, whether it's carbon marketplace or soil health or genetics for better growing, if you can't convince someone to buy, maybe that's the acid test that all investors have to use more of, because that way it's not about ideology. It's whatever your idea, whatever your church is, did it allow you to sell to customers? And if it didn't, you're not getting a check.
It's like we could call it capitalism.
Exactly.
All right. Hey, we haven't heard nearly enough out of Jared and Bobby, my two Iowa friends. So I want to make sure that she's scheming. She's got that look. By the way, she's either got the look that she has something smart to say, or she's saying, shit, I forgot to go out and gather the maple syrup this morning. Because, you know, she has a sideline, which maybe she's actually scheming. I think I should get some venture capital behind my maple business. Is that what it is?
No, maple business this year is not going to be a very good season. It looks to be a very short season, which means we're going to have one heck of a party this Saturday in the Sugar Shack, because everybody will show up at one time. And if I charged them all a nickel for the beer they drank, I'd make more money than we make on maple syrup.
My hobby turkey business, when I did turkeys one year, everybody loved my turkeys and then wanted to know why they weren't going to do it again. I said, because I hauled them all back from the Mennonite processors. You all showed up at my granary. I said, I grossed all the checks. You bitched that I overcharged you for the turkeys because I charged 2.5 times grocery store prices. I said, I still lost $300 because you drank a keg of beer and 4 bottles of booze and 2 bottles of wine at my turkey party. So yes, I can relate to that. I asked a question to Rob Syke in a recording that we did in end of August, and I released on my podcast. If I had $1 billion, where would I invest it in ag, or would I? And that's kind of what the question I think we all just ran around here. I had my buddy. I've got a buddy that's a pure investor. He was my college roommate, and he sold his company, and he's fine. He's well off. He comes out and visits me here in the desert every year and hangs out and drinks beer, plays golf, etc. And he even said, he's like, hey, I have investor people that I'm tied in with. He said, we'd pay you. They'd pay you if you could just be an advisor and help them, guide them on where in ag to put money. I said, I don't want that responsibility right now because I'm not sure that I have a place to tell them. I really don't. So I guess I'll throw it out there. You get $1 million or you got $1 billion, whatever that number is.
Here's
Where do you
what
put
I
it?
do.
I got a guy that's got 6 million and I can't figure out where to put it.
Is that true? I mean, when he says
Yeah.
I need to figure out a way to put 200, and the thing
He
is,
has a $6 million fund and less than 3 billion of it is deployed.
yeah, and they come to people, and honestly, I get these overtures. I'm not talking about the stupid ones where they want me to be on my podcast. I actually have people that say, do you have somewhere for me to invest? We would even give you a finder's fee or factor you in on this. I'm like, I don't have that right now.
Todd, get my number from Damian and have that guy call me.
Yeah, I've sent you like 3 business. I've sent you like 3 business plans, Damian. But you guys are the advisors. You know, and you should be on their paid list. They're you guys are gold to those funds that don't.
Well, because it's network also.
market
Like I can say I've actually done work in this industry, because a lot of them they don't know. When I say here's the thing about sugar, or here's the thing about milk, or here's the thing about this. So that's where it matters.
The only agenda you're pushing is what you believe to be the right agenda and the future of agriculture. It's not, hey, I want this company to survive, I want this company. You're saying, hey, look, this is what I see happening in the marketplace, and that's exactly how those VCs need to be, and PE firms need to that's the intelligence that they need, because they don't have the time to get as nuanced as you are.
One thing that, to Wall's point, is that most of them have told me, if you were bringing somebody, don't bring us somebody that's Todd and Damian have a bright idea.com. In other words, they do want there to actually be some level of, we have a customer base, you know what I mean? Like the patterns or whatever, that, yeah, they're not quite profitable, but they've already, they expanded their revenues, up 30% a year or something like that. That tends to be the condition that I've been told. Maybe Todd, same for you.
Yeah, and to Chad's point, I think a lot of times people in our position think, okay, well, what they need is somebody that can, point them in the right direction, and predict the future, model where they should be. They feel like they can do that. The questions they ask me are like crazy simple. For somebody inside the industry, it's just like, and sometimes it's like, you're talking to a guy, there's 3 people on the call yesterday, and all of them, they had a combined like 5 degrees from Ivy League universities. And they're asking me questions that are just like, I was afraid I would insult them with my answers, because I wasn't sure, they just don't understand the mechanics of the industry. So it was a real eye opener for me. I hadn't spent that much time with a private equity investor in quite a while, and a lot has changed since the last few discussions I had.
And by the way, to everybody's point here, and that's pat ourselves all on the back. We have expertise in something that is still pretty misunderstood. I mean, these people are not dumb. The 5 Ivy League degree between 3 guys or 3 gals are not. But like my investor buddy, who comes out here every spring and visits me, called me when he read that hogs were being destroyed. He says, "I understand this." I said, "What are you talking about?" He says, "Well, why in the hell they're just like going out and like shooting pigs and putting them in a pit?" I said, "Yeah." And he said, "Well, why can't they just keep them back until the processing plants reopen?" I said, where would they keep them? He says, "Well, just wherever they are." And I said, he didn't understand the idea that that our supply in the hog thing is so tight that a pig goes out, a fat goes out, and a piglet comes in. And I had to explain all. He said, and he still didn't understand. He says, "I just don't understand why we can just stick them somewhere." I said, "Well, you live in Evanston, Illinois. How big's your yard?" where would these things be stuck? How do they? So like those kind of things, the fundamentals of production are lost on some of our investor class people. Bobby, if I gave you $1 billion, where in dairy would you put it? I can't think of a place. Maybe you'd say dehydrating, some sort of thing where you're sending, but that's been overdone. You'd say, okay, cheese, because we still kind of have a little growth in cheese, but that seems to me it's overdone. I don't know. I don't have a place, certainly not on the production side or even processing side.
I'd put it toward our company right now. We're looking for investment right now to take this FDA product into the market. So, I'm very singular focused right now.
Do you want me to, Jim Schwartz, the guy with Open Prairie, he says he wants me to be a conduit for him. I'll kick him all of your stuff, and I'll send an email with Chad or but like I said, it's not Todd's already got people looking. I'll send them both of you guys, and then you can make the introduction, because I know that
we check the boxes that we've talked about here, right? Like existing revenue. We have a product line that's bringing in existing revenue, and we have rolled the dice to get another new product through FDA, and that has just almost killed the product that's bankrolling the roll of the dice product, right? Because it's put so much stress on the company financially. But we're cresting now. If this thing gets FDA approved by May, like we're thinking, now we're finally past that crunch. So still a lot of things I would change, but
so my idea is more small cap. Okay. But I think, we've talked about the next 10 to 20 years is going to be this generational transfer of wealth, right? So boomers to Xers and millennials. Well, there is an incredible amount of boomer owned small businesses in the ag space, small businesses in general, but in the ag space, of course. I would be doing M&A in the ag service small business space. Again, it's small cap. A lot of these businesses are, you know, $2 to $5 million in revenue, and a lot of that doesn't get investors excited. But you do M&A, pack them all together, and move them along up the value chain. That's what
you're creating a mutual fund, creating a mutual fund of small ag-centric businesses so that they become attractive to. By the way, that's the other thing that my investor people tell me is that there's all kinds of room for, because somehow like the Todd thing, I got $3 billion. I can't be messing around with buying something for 4 million. Well, I think there's all kinds of, it's all overlooked.
Right.
That's a great comment, Alec. And that we're seeing that on the veterinary side, right? We're seeing groups go out and buy all of these little individual veterinary clinics and then consolidate them into one big group, right?
Sure. Look at my business. You know, soil testing, crop consultation, agronomic consultation. There are probably in Illinois, there are probably 5 or 6 companies just like mine that were my business was started in the early 80s. All of those companies were started in the 70s and 80s. Those owners are now in their 70s and 80s. What's the plan here? You know, and realistically, we're all about the same size. Mm-hmm. I would bet that we all do about the same amount in revenue within a few $100,000 of each other. You know, so you put 5 of those businesses together, you're looking at a $5 to $10 million business. It's a lot of work. It's a lot of work, and that's why it's small cap. But I mean, Alec, I'm willing to do it.
Since you're the youthful one, maybe you should be the assembler of all that and the buyer of those companies that you're talking about.
Sure, I'm about it. Yeah.
Hey, I don't want to take all day. Is there anything else you want to get to, Todd? You brought topics, and we mostly stuck on the farm income, then moved into the capital deployment and ag, which is a great topic. Ryan had to split to go and be on a commercial. And by the way, you see over there, Chad put a question in. We're fine covering that, but that's a kind of specific. It's going to be a little over the heads of us because Chinese organic protein that's being dumped on us. We're going to bring in somebody that's an expert on that because that's over our heads, I think. Todd?
Yeah, I actually know a guy that might be able to touch on that topic and some others that might be relevant to everybody else. So I'll reach out to him and see if he'd be willing to come on.
I think broadly what I'm looking for to understand is how it could have an impact on the sector in general, like proteins. And you've seen tariffs, you've seen prices rise. Do customers look for different products? Do they swallow it and pass it on to consumers? One of the values that I always find in these chats and why I keep tuning in is because there's so much historical knowledge. And history tends to predict the future. So, you know, what's happened in the past when we put tariffs in place and on ag products and companies have been, you know, they found dumping to be at the cause.
Well, I mean, it's you know, anytime I see something like that, like we can't make it make sense here. They can make it make sense. Maybe it's because that they're not really organic, you know. Like, you know, it's just, you know, maybe it's just that simple, you know, that there's, you know, they're just blind to us.
Right.
Probably some of that here too. But.
Is there anything else we need to cover on this one? Other than if you're serious, Bobby, I'll make sure I do an email promptly to Jim at Open Prairie and you, and then for Chad as well. And even for Alec, that's kind of a pitch though. I don't know. I don't think you're going to get normal private equity on that one, Alec.
No, I agree. It's small cap. They're not interested. Yeah.
There's a lot of people out there talking about exactly what you're talking about. And I think it's a matter of getting a group of people together. There's a huge opportunity there. I talked to a guy a while back, completely unrelated, but he was talking about doing something similar with these trade related businesses. So he's saying, look, there's a lot of really profitable, smaller, plumbing companies, electrical, electricians, that don't have anybody to sell their business to. They're ready to retire. They don't have anybody to sell their business to. There's nobody out there that's got the combination of skills and interest and
You're
capital
missing the
to
bigger
make
point,
that happen.
though.
So,
Most of those, the business is the guy or gal, and you're going to probably, it would be reasonable to expect. My electrical contractor friend was just here, and yeah, he gets overtures. Well, when Larry is not the guy, is it reasonable to expect that somehow you're going to maintain the same revenue and the year after you sell it? I think you could talk about a 50% deduct on revenue, because when Larry's not there, or Margaret is not there, these companies, I mean,
well, the
I've lived,
problem
I've
is
lived
there's
that,
not.
Damian. I've lived that.
well,
There's
you're the one that, you didn't start that company in the 1980s. You were not even born then. And now
Right.
you're the guy that took over. You kept some of the book, but you lost a little bit of the book because it didn't matter how good or bad of a job you did. You weren't Tom,
Yes.
and
No,
Tom's
that's
who they always dealt with.
exactly right. Yep.
Well, there's definitely something to be said for that. And really what there is a shortage of, there's a shortage of electricians. There's a shortage of plumbers. That's a real issue.
Yeah.
But what there's a real shortage of is people with those skills that can also run a business. That is a really uncommon, skill set. And so that's a real issue that I think, Alex kind of is driving on, is how do you resolve that issue?
Yep.
So yeah, interesting stuff.
All right. If there's anybody else, anything, otherwise I'll go ahead and give you the preview for the next meeting. Anybody?
I just wanted to plant a quick seed.
Okay.
I've been thinking a lot about, we've been doing some modeling projects, and I've been thinking a lot about how to do modeling better, how to do forecasting better, how to do
Now these airplanes or
foresight better.
ships? What kind of modeling we talking about? Airplanes?
No, I'm talking
or
about,
ships?
so like I'm one of the projects that I've been working on is trying to build a demand projection model, food demand projection model. And so I've been thinking a lot about that. And one of the things that I've landed on is looking at different scenarios and talking about ranges, instead of talking about, hey, we project that the demand is going to be X in 2040 or whatever. We should always be talking about ranges and modeling different scenarios that are plausible. And so some of this is blending some of the other work that I've been doing on the strategic foresight side, but it's got me to thinking about maybe we need to be expanding this. Well, when you do sales forecast, you should probably be forecasting a range, and maybe you say, okay, well, this is where we, if the most likely, where we're going to land, but you really need to be talking about a range, because it creates productive conversations that I've ever been around. What is a scenario that could have you on the bottom of that range? What's a scenario that could have you on the top of that range? Does that make any sense? Is that really plausible? These are enormously productive discussions. So if that's something that resonates with people, I'd be happy to try to put together a structured discussion around that, because I think there's definitely something there, and it seems to resonate with people, and I just keep finding more and more applications for this concept. So let us know if that resonates, and I'll try to think through what that could look like.
So
I am both thumbs up on that topic. I would love that.
modeling
Okay.
potential outcomes based on external factors, and you're talking about bringing in you and one other person, Todd, or?
Yeah, and so some of that could be, one of the weaknesses that I've found is I've been working with a statistician to help me really think through some, simple applications of these concepts that don't have to be, as rigorous as what they typically do. So trying to get a statistician to dumb stuff down is remarkably difficult. So, yeah, bringing somebody on that brings a little more of that perspective, I think would be helpful. And then there's also this AI piece. I think that might be a really interesting application.
By the way, congratulations,
of AI.
Alec. Alex Splitton, by the way, he just had a baby. So he just
Yeah,
had
this is Walt. I like the modeling exercise, Todd. That'd be great.
All right. So maybe Todd, if you can find a person that we can do that on March 8th, which is the next time we're getting together, Friday, March 8th. I've got the AGCO people. It's not a pitch. It's not a commercial. We're talking about autonomy, working with them on the extreme ag side. And the AGCO guy does fine, but they have a subsidiary, a wholly owned subsidiary. Actually, it's I think out of Canada. And this guy talked at great length about the evolution of autonomy in machinery and how the intelligence of it works. And it'll go from this machine and then the retrofit ability. And so he kind of went down a thing when I said, I like the idea of don't just come in and talk to me about tractors, talk about what happens first, second, third, fourth, fifth. So kind of the chronology of how this will come about. And it was pretty good stuff. He's an engineer, but he's a good talker. And he also knows the business of ag. So it was a neat thing talking about where we'll be 1 year from now, 3 years from now, 5 years from now, 7 years from now on utilization of technology to create autonomous farm machinery. So that was the topic that we're going to hit on March 8th. Then we meet again on March 22nd is the next one after that. Maybe we can look at modeling. And then I don't know about the pea protein or the bigger topic that Chad introduced there about dumping from foreign countries, not just China, which they're talking about ag policy stuff because this has been, I've been hearing about this since the first time I picked up an ag trade magazine in the 1970s about dumping and other countries subsidizing stuff to put it on the world market. So that's kind of a bigger, that we were talking about, Chad, right?
Yeah, exactly.
Cool. Till next time. The next two podcasts are coming out. We're talking about oversupply, me and Todd, and they're long discussions, but we went through, and the episode is going to release this Monday, is, oversupplied. Why do we keep our foot on the gas of production when we clearly are in surplus on just about every commodity? So Todd and I addressed that in this Monday's topic. Then, because we try to be smart, we said, what if we were wrong? What if all the parameters we talked about on oversupply, and what if there's actually some factors that would mean that for especially North American ag, we aren't going to be oversupplied, and we were wrong. So we asked that in the next week. And we went through things like maybe Africa really does become the next China. Maybe the European Union is going to shut off production. Maybe the Chinese economy and Chinese military aren't going to, be at war with the United States. Perhaps Brazil and Argentina really are propped up on too many synthetic fertilizers. So we went through that, the reasons for oversupply, and so I really think it's a great discussion. If you like those kind of things, that's what's coming up the next two. I'm gonna be at Commodity Classic, running my tail off for Extreme Ag next week. So we'll see you on March 8th. Anything else, Todd?
That's it.
That's it. Thanks for being here. Till next time. Thanks for you people that are listening. Recording out. Bobby, stay on for a second, please. She just left. I guess we'll do. All right.